So this video is directed towards the newbies in crypto, people that are looking at price charts but don't understand what it is that they're looking at. So I'm going to go over in very simple terms how you can read a price chart and how you can understand at any date and any time whether something's performing bullish, whether something's performing bearish. More importantly, why the candlesticks form. Okay, firstly, if you are new to crypto, welcome to the space, guys. You're going to be looked after here, but make sure that you don't, first and foremost, put all your eggs in one basket. Don't FOMO into any positions. Make sure that you don't put in anything that you can't afford to lose. That's an important thing, guys, if you're new to crypto. It's all about preservation of capital. If you can't preserve your capital, you can't make those gains. So, how do you understand a price chart? Many of you have probably seen me doing price charts. Many of you have probably seen other people do price charts, but you don't understand how they actually work. So the first thing that I want you to do, guys, and I want you to do this yourself, get yourself onto tradingview.com. It's completely free to use. There's a free service on there. So go and sign up to the free service and familiarize yourself with the charts. So how do they work? You've got the bottom line here. You can see the date down here. So this is your date at the bottom. And then on the right-hand side, this is the price. So we've got the Bitcoin chart up here today. This is the Bitcoin chart. So you can see today, this was Friday, the 8th of November when I recorded this. Today, on Friday, the 8th of November, Bitcoin is trading at $75,986 at the moment. So you're looking at the date and you're looking at the price, date and the price, and you can get whatever price it was during that date. Right, okay, so the next thing that I want to show you guys is these time frames at the top of the chart. You've got the weekly here, you've got the 3-day here, you've got the daily here, 12-hour, 8-hour, you go all the way down to 1 minute. This is going to be your time frame analysis, and this is an important thing. If you're going to be trading, how often can you be at the chart? If you're going to be at the chart once every month, you need to be on a higher time frame. If you can be at the charts several times during the course of the day, you can bring your time frame down. Don't trade, guys, unless you know how to trade. That's the main thing. This is just understanding the basics of how to read a price chart. So you can see that's your time frame, and you'll see the look different, the different look, the different feel of each time frame. Some time frames will be bullish, some time frames will be bearish, and you've just got to understand what is your time frame and not get mixed up between the different time frames. Because if you're trading the weekly and then you're looking for entries on the 15-minute, that is just going to mess with your head. It's not going to be a strategy that you're going to be able to win with, unfortunately. So know your time frame. So back to the daily chart. We're back to the daily chart now. How do these candles work? What I'm going to do is I'm going to do an example of how a candlestick would behave. So let's do an example of a bullish candle. We've got a bullish candle, and what you get is you've got the open at the bottom, and then you've got the close at the top. That confirms that it's a bullish candle. There's the open. It's green. The close is above the open. That means that it's a bullish candle. What you'll often get is a wick. What does that mean? The wick represents the extreme highs and the extreme lows of any given session. So we're on the daily time frame. This is the wick to the upside, which is the extreme of the high on the day. And then we haven't got a wick to the downside. So that means at any point on this one candle here, that the bears haven't pushed price below the open. That's showing conviction for the bulls. That's showing that the bulls are pushing price up another level. So the bulls have pushed price up another level. And you can see we've got an extreme high on Bitcoin of 76,354. And you can see one thing, we closed below the extreme high. So we've closed 75,632. So that's the extreme high of the session. That's the extreme low of the session. We're on the daily chart. So this would be 1 day of price action. The body is the close of the candle. And remember, we've opened and we've closed green above. So that means it's a bullish candle. So if we bring the next session on now, and pretend we're on day 2. So where does the candle open? Remember, guys, we've finished here. So the next candle is going to open here. We'll make that a red candle. So we've got the open and we've got a red candle. We've got a bearish candle. So the bears are winning on the day, but the bears haven't managed to push price below the open of the bulls. So that's showing that the bulls have still got conviction over the 2-day period. Then, of course, you've got your extremes to the upside and extremes to the downside. Now, another thing that you might see is something that looks like this. Then you've got the extreme highs and the extreme lows. So if you imagine this as your session, remember it's a bearish candle. So we've got the open here, and then we've got a red candle that's moved to the downside. That means that the bears have got control, although at some point during this session, the bears have pushed price action all the way back down there, and then the bulls have managed to push price action all the way back, causing indecision, and then exactly the same in reverse. It's the bulls have managed to push price all the way to the extreme during the session, and then the bears have pushed price back down. So you've got sell orders, sell orders, sell orders, pushing price into the middle, and you've got buy orders, buy orders, buy orders, pushing price into the middle. That's creating indecision. That's creating your doji candle. So when you've got a doji candle, you need to look at other candles to find out whether you're at support, whether you're at resistance, and get additional conviction on the back of that. We're not going to go into that today, guys. This is simple terms. So you've got the date and you've got the time. You've got the open for the bullish, which closes above the open to stay bullish. And then you've got the close of the bearish, which has got to go below the open of the bearish candle for it to be a bearish candle. And then you've got the indecision candle. So we can get clues and we can get things from the charts by just looking and seeing whether the bulls, whether the bears have got momentum at any given time, whether it's at support, whether it's at resistance. But I'm probably going a little bit too far for this video, guys. So if you want more price action, if you want more tutorials, if you are a beginner to crypto, join the Crypto Bullseye channel. I'll be going over more of these videos, and let me know in the comments what it is that you want me to cover next. So join our free Discord group, guys, and I will see you in the next one.